12:45, so I just wanted to introduce our next Market Outlook session. If you haven't met me, I'm Jill McDonald. I'm the Executive Director with the Saskatchewan Barley Commission. And if you are still with us, I'm glad you're still here and hope we're providing you some value with these sessions today. So before I turn it over to Marlena and Chuck, I just wanted to remind everyone that the question period will be at the end of the session. I know Chuck and Marlena were able to answer some of the Q&As as they went along, so they might be able to do that, but hopefully we get some time at the end and they can answer questions as well. If you do have a question, please use the Q&A function located at the bottom of your Zoom window. So for the afternoon session, I would like to introduce Marlena Borsch from Mercantile Consulting and Chuck Penner from Left Field Commodity Research, and they'll be doing a Flax and Oats market outlook session for us. So I'll turn it over to Marlena and Chuck.
Thank you very much. And we'll start with sharing the screen properly again. There we go. So I hope you can see my screen this time right from the beginning. And welcome to the afternoon session. It has been a whirlwind morning already with quite a few AGMs. And we also, as you know, had the USDA report this morning, which was overall bullish, both on oilseeds and grains. Feed grains, and certainly seeing a reaction in the futures market on that. Soybeans up almost 50 cents when I looked last. So moving into the flaxseed side on the oil seeds, we're certainly seeing another boost on the price side. This afternoon, we'll talk about flax specifically. I'll only have one slide kind of to easing us into the flaxseed with the overall oilseed picture. And we'll talk about global flax as much as we have the data, and then ease into the Canadian side, including what we expect for next year a little bit. So those who were at the canola session, they have seen this slide, and basically what it summarizes for all the major oilseeds, soybeans, rapeseed, and so on, that we had slight increase in production this year overall, but we're also seeing a consistent increase in crush and in exports, and a decrease in stocks that today actually were where that slope was steepened a little bit yet. So that's what's underlying some of the oilseeds, and is certainly providing support for the flaxseed as well. So in this slide, and I'm trying to hurry a little bit because I think I took a little bit of Chuck's time this morning, and I'm trying to avoid that, Chuck, this time around. Sorry about that. On the left-hand side, our first table depicts global flaxseed production to the best of our knowledge. As you know, CIS, former Soviet Union countries, Eastern Europe, it's very hard to have very definitive numbers. So we have CIS, Europe, Canada, United States, China, and some other. And you can see on the table, as well as on the graph on the right-hand side, the red line depicts total numbers in terms of production. That production has actually come up a little bit this year compared to the previous year, and primarily due to increases in Russia and Kazakhstan. So that's what we see on the production side, which might surprise you a little bit. Just a very quick slide to show you the demand breakdown on the other side of that. I just told you that production has actually increased a little bit to just over 4 million tons on a global basis. This shows you where the stuff is being used in terms of imports. And certainly Europe, still a very big factor in the market, followed by China and the United States. These are 2019 figures because we have the full years available for that. However, I would also add that in terms of global import volumes, our numbers indicate that this is up by about 18% over the last 5 years to about 1.9 million tons versus a 15% increase in production over roughly the same time period. So you can see that here as well, the supply and demand are narrowing over the last little while. This is just a mental image as to how and where this trades. You can see Canada and the United States on the left side. We are exporting to the States, into Europe, and into China. These are the three big blocks. And so does Russia, into increasingly into China, but certainly also into Europe and so on. But it gives you a little bit of an idea as to the flow of flaxseed around the globe. In terms of values, Russia has become the leading country, measured in US dollars on this graph here, followed by Canada and Kazakhstan. It gives you also a little bit of a gauge in terms of size of the market that we are talking about. The EU is a big importer and tremendously important to the Canadian market this year as well. They do produce flaxseed, but over time, their production has diminished actually. And so you see the purple bars on the bottom. According to European Union data, they produced about 74,000 tons in 2020, which is up a little bit from the previous year, but certainly much, much smaller than in the early 2000s, certainly, and definitely from 1999, which was the peak in production in excess of 400,000 tons. The little map on the right-hand side actually shows you where this is produced, with Sweden, Poland, Romania being the most important production countries within Europe. Although this is one of the main importers, it does show you that they produce some of this and also where it is being produced. So on global flax for the 2021 year, again, we have a production of around 4 million tons, which is up from the previous year. We had no major production problems in the Black Sea countries. I had actually thought to see a decrease there because it had been dry in several areas. But we believe that the production has actually in the Black Sea gone up by about 220,000 tons to 1.9 million tons. We do know that Russia has already shipped a substantial volume, about 350,000 tons between July to November. That's a 23% increase. For Kazakhstan, we only have September numbers. They had shipped 30,000 tons, which is about double what they did the previous year. We also understand there's some increase in domestic crush of linseed in Eastern Europe, which infringes a little bit on the export availability. On the demand side globally, we can say that European flax is very deficient, and because we see more Black Sea material moving into China, it's more deficient than people had anticipated. Demand in China itself is also growing, but they are diversifying their sourcing. So when we look at the next slide, this is again a snapshot from 2019 in terms of the breakdown of the Russian and Kazakh markets, Russia on top and Kazakhstan on the bottom, as to where they ship their flaxseed to. And certainly Europe, with Belgium in the lead, most important, followed by China, and the cube for China, particularly from Russia, is increasing and will be increasing for Kazakhstan in the future as well. And we'll look at a map later on why that is so. So this leads us closer to home. And here's some statistics and a couple of graphs for flaxseed production in Canada on the left-hand side and in the United States on the right-hand side. As you know, we are off even some of the higher numbers in the 2015s, and certainly have never recovered the problems in Europe production. But I would put Canadian flax production at about 40 to 560,000 tons, and in the US to 171,000 tons. This is USDA data. So when we look at the two countries combined, we're looking at about 1.2 million tons in 2015 and now down to about 750,000 tons, which nevertheless is an increase from the 2019 year. Particularly fueled by some better production in Canada. So supply is up only about 40,000 tons. And I have a little footnote there saying, while discounting the carry-in from the previous year, because there we had substantial quality problems. And we believe that some significant tonnage of that disappeared into the feed markets. So when we look at specific numbers on the Canadian balance sheet, you can see I framed the recent year, 2021, our estimate in red. Then we have the StatScan / agriculture and agri-food data in there. And then on the right-hand side, there's a forecast for the coming year. Again, total supply we put at just under 600,000 tons. But as you can see on the 1920 number, I put quality problem underneath the carryout, and we subtracted about 45,000 tons or so as having disappeared into the feed market and therefore not available into the export markets or into the normal quotation mark flaxseed markets. Also, I should be discussing some of the export numbers. Last year was a very low year, 350,000 tons per StatScan. And for this year, and we'll look at the detail in a second, I'm using 420,000 tons. I should point out, and I emphasized it in red, that Agriculture and Agri-Food Canada is using 500,000 tons. But when we look at the detail in the recipient countries into the destinations, I'm not sure how we would feed that and which country would be taking that amount of flaxseed. So just to put your attention as to how important it is to vet some of the numbers and to really think about the numbers, because it will affect your marketing decision very materially. Ending stocks for this year, I believe, will be a little bit lower than last year, and that's using the reduced quality tonnage. So in terms of exports, again, I circled in red the 1920 year and the 2021 year because there's a big question mark about the 500,000 tons that Agriculture and Agri-Food seems to think we can export. We are allocating about 120,000 tons for now into China, and we'll show you some year-to-date numbers. The big buyer this year is Belgium, or I should say the European Union. It arrives in Belgium. I'm allocating 165,000 tons, up from 75,000 tons last year. So that feeds into that void left by Eastern European material, moving more into the Asian market, and we are then substituting them. United States are left more or less unchanged at 95,000. So that's how I'm coming up with my 420,000 ton forecast for this year, for the entire year. The big question remains, how much will China need, and how much of what they need will they procure from Russia and from Kazakhstan? Very quick snapshot from last year as to how much, from which origins China has been sourcing their flaxseed, and it was almost 50-50 between Canada and Russia and Kazakhstan combined. But I think, as I said before, that will be weighed more towards the Eastern European countries as China is seeking to diversify the sourcing of a lot of their products, and particularly some of the smaller products. When we look at our export performance year to date, you can see the yellow cones are this year's exports compared to last year's exports. So Belgium, or the European Union, certainly has seen very significant increases followed by China, which also is more inclined to buy from Canada this year as things tighten up. And then exports to the United States are up a little bit as well. So all of our three big buyers, the bigger buyers, have been increasing exports very materially, led by the European Union. So as I said earlier, a lot of the 2019 crop carryout disappeared into the feed channels, and it's distorting the supply and demand numbers to some degree, unless you take them out. And effective ending stocks in quotation marks were fairly low. Much of the 2020 crop is already sold because we have seen excellent prices, and at $18.50 for Flax, you know, these are very excellent sales as well. I don't think there is an awful lot of Flax still for sale. And I would continue to operate on a scale up basis there as well, as we have done year to date. Without any doubt, the improved rail car availability is helping and has smoothed our exports very significantly. And we expect continued good demand from the European Union as the Black Sea countries increase their tonnages into China. In terms of recommendations, as I said earlier, most of the Flax for 2020 is sold, and then we just ease that out on a scale-up basis. Returns for Flax for new crop are actually still lagging some of the other commodities in spite of the high prices. And that's because we really need to do some work on Flax yields, which will change that equation around very handily. But as the yields remain relatively really quite low, I'm not so sure if you'll see a very material increase in Flax acres for next year. And I should actually back up for a second, because I did not talk about our outlook for 2021 when we looked at the appropriate slide. I think we'll see some increase in acres. I used a 5-year average yield, which would be 23.1 bushel. That's what we're talking about when we're saying it's still a fairly low yielding crop. And I think we will see 450,000+ tons of export demand, depending on what China will be doing in the coming year as well. Given some of those demand numbers on new crop, there were some $15 and then $15.50 bids. We recommended already before Christmas that we would not be looking at contemplating Flax, committing Flax for next year below the $16 mark. And you can move that up with what's happening in the markets this week by another 25 cents for sure a bushel as well. So I would not log in relatively low returns relative to the other crops this early on in the crop year, and we would look for a basis of 16 in the quarter now for the new crop pricing. Just a couple of other considerations actually before I close my section, and I wanted to show you a slide that I've used in the past. It's about 2 years old, and it shows on the left-hand side linseed production and transportation costs in Canada compared with Kazakhstan. And production costs are very, very low in Kazakhstan. And so although their inland transportation is relatively expensive, in this case compared to go to Belgium, they still have about a $74 difference a couple of years ago in terms of getting it to market. So we have to work on yields and production costs to remain competitive in this market. Another very quick slide, which helps explain why there is a reorientation away from Europe, but into the Chinese market with some of the material coming from the Black Sea countries. And it's a schematic of the new Silk Road, as it's called, which goes through Kazakhstan, which is shown in the dark gray color, and from there into China. which enables them to move goods much more speedily and affordably from the Black Sea areas into China as a backhaul for some of the industrial goods and finished goods moving into Europe. And that is something that we need to keep in mind in the long term so we stay competitive in some of the markets. Inadvertently for this year, and I think for the near future, it is freeing up the European market for some of the increased flaxseed exports from Canada into Europe again. So it's a very, very interesting development that we'll need to monitor forward. So with that, and I think just within my time limit, Chuck, I'm passing it on to you for the oats, and I think we'll take questions at the very end.
Okay, that sounds good. Thank you, Marlene. I appreciate that, and I think we're doing just fine for time, so no worries that way. So now it's time to jump into the oat outlook. So here we go. So the situation for oats is earlier in the year when other markets were really taking off. Oats seemed to have a bit of a seemed to be lagging to some degree, and so wondering about that a little bit. But of course, that situation has since resolved itself, and so we'll look at why that is and where the rest of this year will look and how next year could look as well too. So that's the plan for this presentation, and so we'll look at it that way. So what we had was we had a crop of a little over 4.5 million tons in 2020, and that was the biggest crop that we've had in well over a decade, and that started to look fairly heavy. And at the beginning of the year, based on kind of some normalish kind of usage and demand, that started to look fairly heavy. But it very quickly prices started to move higher in spite of the bigger crop. Of course, we carried in very low volumes as well too, so there was next to nothing in the pipeline. But it's the export picture that has been the surprise. So production wasn't really a surprise. It's the export picture. So as of week 22, we've exported about 1 million tons of oats, and this is the CGC data, so it doesn't include trucking down into the U.S. and that type of thing. But we've exported it's record volumes, and so this is what caught me by surprise. Maybe there were others who excuse me, who weren't surprised by that, but it caught me by surprise because when I looked at the US situation, and the US is the dominant buyer, when we look at the US situation, their crop was larger, their 2020 crop was larger, so it looked like export demand would be roughly steady, so it had that potential. But again, like I said, the price behavior started to show something different fairly quickly. And when we look at exports to the US so far this year, they're running pretty well. Last year was quite a strong year, and we are above average, but we're certainly not exceptional. So the question is, who knew that South America would suddenly arrive as a large oat buyer? And like I said, I was surprised by it. I don't know if anybody else was tracking oat production in Chile, but essentially that's what's happened. Is a lot of it to Chile. They have been an oat exporter to surrounding countries, and those volumes have really dropped off. And so now the South American hub of oat exports has kind of disappeared. So we've seen these big volumes. So if you look at the yellow bar in this chart, these are StatsCan exports to November. That's the US, and so that's been tracking along fairly close to average. Again, as I showed in the other chart, no big deal. Almost all of that extra has been coming from South America, and frankly, until this year, I didn't have South America on this chart at all. And also, some has been going to Mexico, which StatsCan classifies as Central America, and so that's the other extra bit of demand that's really taken it to the next level. So so again, maybe somebody else saw that. I certainly didn't, and so that's worth. That's really been the difference maker in this year's oat market. When we look, the other bit of it, the other very positive news is that added capacity, added production capacity in Western Canada has been met by increased exports of oat products. So these are flakes and rolled oats and all of those kind of things. And so for this year, it looks like we're on track to export about 900,000 tons of oat products, or that's the oat equivalent, the grain equivalent. And so that trend, you can see the trend is quite steady, but it's actually in the last couple of years has picked up quite nicely. So that's the other added bonus. This one was a little more predictable than that South American demand for the grain, but this is also a very positive thing for the Canadian oat market. The other one that I want to point out, though, is I want to point out Australia, and it hasn't come up in as a topic of conversation much in the past. Australia largely has supplied China, but when they had bigger crop production, uh, we've seen them exporting. They at one point, trying to think, 3 years ago maybe, they actually owned the Mexican market, and so they were the dominant exporter into Mexico, and Canada was largely shut out. Now that has flipped around, or it's flipped around in the last couple of years, where Canada is the only exporter, almost the only exporter into Mexico. But this year's oat crop in Australia has jumped up to 1.6 million tons. And so that makes me a little nervous. So now that their harvest is complete, makes me a little nervous that some of that demand for Canadian oats from places like Mexico and maybe even South America will start to back off, especially if our oat prices are running at a premium, let's say, to Australia. So there is room for them to move back into some of those markets. But the thing is that we've shipped out so much oats through the first half of 2020-21 that even if well, demand, exports largely have to back off anyway, so it's not going to hammer the market to any large degree, even if Australia does start to regain some of those markets. So that's one that we want to keep an eye on, though, and keep moving. Well, just keep an eye on and track that. These are Canadian and Australian oat prices. So the red line is kind of the average Canadian bid plus ocean or rail freight, sorry. And then the other one is a bid in Western Australia, a track price at Kwinana in Western Australia. And so you can see when they had their smaller crops, they were running at these extreme premiums. And so Canada was very competitively priced and took over those markets. But now with Canada's oat prices rallying as strongly as they are, they've actually moved back over to a premium over Australia. So that's why I'm saying we could see some of that demand shifting around again in the second half of this marketing year. The other one that we sometimes watch is Sweden and Finland. They have been exporters at times, depending on the price relationships, and they will at times export vessels of oats to the US. So they will displace Canadian oats at times when the price relationships are right. So their production was up a little bit this year, almost 2 million tons. And the rest of the EU, their production was up significantly more yet. So there's less demand from, let's say, Germany, Poland, those countries for Scandinavian oats. And so that could put European or Scandinavian oats back into play for the US market again. If Canadian oat prices keep rallying the way they are, that could make European oats a little more competitive again into that market and take some of that demand. It won't be huge amounts, but it could be enough just to keep take the edge off that market anyway. So when I look at Canadian oat ending stocks for 2021, this assumes a slowdown in exports in the second half, largely because of Australia, maybe a bit because of Sweden and Finland as well too. So but it may be, if those don't come in, then we'll certainly see those oat ending stocks drop further yet. But even if they do end up at around 550,000 tons, that's still it's larger than the last couple of years, but historically that's still relatively snug ending stocks. And frankly, the way prices are behaving right now, that ending stocks total could come down even further yet. When we look at oat bids and Chicago oat futures, that's the purple line, and then the average line, the average North Dakota bid is the green line, and then the Canadian prices. And largely the North Dakota and the Canadian oat bids tend to be separated by roughly the amount of truck freight or rail freight, the difference to U.S. millers. But you can see that all three of those have really rallied sharply. The oat futures isn't a great indicator because a lot of the cash buyers don't use it as a hedge anyway. But we can see that those markets in Canada and in North Dakota are already getting close to the highs that we had this past almost a year ago in spring. And it's very early in the marketing year for that to be happening. And so that's telling me that this market could be yet stronger yet than last year. We just have to see how that Australian oats comes into play, if it does. In terms of seasonal oat price patterns, it's actually, this is over the last 7 years, based on bids over the last 7 years. These are average Western Canadian bids. But what you see is a very dramatic seasonal pattern that we've had over the last 7 years. If you look at longer term, there isn't that real drop off in spring. And based on the price behavior this year, I don't think we're going to see much slippage going into this spring. And it may just ignore the seasonal tendency altogether. But we're starting out definitely on a strong note. And again, if Australia and Scandinavian oats don't come into the picture, it could get a little more exciting yet. So it's something always worth keeping in the back of your mind. When we look ahead at 2021 acreage, again, this is I use this chart in a similar chart in this morning's session, but oats. This is in the black soil zone. Just for those who weren't part of this, this is a real rough calculation based on using seed, FERT, and chem and crop insurance costs and nothing else. And then we use new crop bids and average yields and so on. But in the black soil zone anyway, oats is the top cereal. And it used to be years ago, a few years, not even that many years ago, that oats was kind of always at the bottom of the pack. So if oats is in the top half of these crops, and again, ignore the numbers across the bottom, it's more just a relative ranking against each other, oats should do fairly well. The thing is that we have extremely strong acreage competition this spring, and it's happening with nearly all crops. Marlena pointed out, looking for $16 new crop flax bids, and canola's way up there, and the special crops are working in that direction as well too. So lots of competition. So even though oats performs well, it may not trigger a bunch of acres, and so we're actually thinking that oat acres may not have much more room to go up, and may even dip just slightly, just because of the extent of acreage competition. And just to generalize, there have been years, I've been in this a number of years now. There have been a number of years where farmers are trying to figure, okay, where am I going to lose the least amount of money? This is not one of those years, and it's a matter of where the opportunities are the largest. And so in that kind of uncertainty, we may see rotations actually not shift around all that much. But so if we have average yields and a little dip in acreage, what we'll still see is fairly comfortable supplies. And what that means then, and I said earlier that the carry-in could be a little bit smaller into next year. But what that means is if we have comfortable supplies, then more of the longer term outlook rests on the demand side. And I'm guessing, of course, I didn't see South America coming this year. So what I'm looking forward to next year, though, is that I'm not expecting, I'm still expecting a little bit stronger demand from the US, but some of that extra demand from South America and Mexico may fade. And so I don't know that we can see exports again as strong as they were, as strong as they are in this current year. So that's kind of the the if there's a bit of a cloud on the horizon, that might be it. Of course, as I said this morning too, is there's a lot of weather between now and then, and right now in a large chunk of Western Canada, including some serious oat growing regions, it's quite dry right now. So we need that to resolve. So the ending stock situation for next year could be a little more comfortable by the end of the year. But I still wouldn't consider, 650,000 tons to be heavy. We've had stocks closer to 800 or even a million tons. And so I wouldn't call that heavy, but not quite as tight as where we are in the last couple of years. Oh, here's the weather. Here's the soil moisture map that I showed earlier this morning. So that big red blotch in the middle, and the brown, there's a lot of oats grown in those areas, and we'll need some rain or some snow before that comes about. So just to summarize a few of the bullet points, this year a solid crop, but the demand has been unexpected. I'm still thinking, and this is mostly just a hunch on my part, but that Australian oats will return as a stronger export competitor in the second half of this year, and that Canadian supplies are already running low earlier than they did last year. For next year, solid acreage again next year toward the high end of the last few years. I'm uncomfortable thinking we'll be able to export everything we have this year. But then on the flip side, we've got these dry conditions in Western Canada. So a tight-ish supply outlook, I'm putting it, but I'm a little more cautious than I am for the current year. So that's what I have to say. I think we do have time for a few questions. So I'm going to unshare my screen now, and then we can look to see whether there's any questions in the Q&A. Okay, here's a question. Educated guess about how much Canadian oats is trucked to the US. It varies from year to year. I'm going to say something like 400,000 tons on an average year. Marlena might have a better idea than I do. And that's out of a program of somewhere between 1.6 and 1.7 million tons. So maybe about a quarter of it. That might be a little overdone. And Marlena, feel free to chime in if at any time. How dated is the oats versus other crops margin comparison? Good question. That was done in December because everything is off the table since then. That was late December, just before the Christmas break. So yeah, $5 feed barley bids. Canola has gone crazy. Flax has gone even higher. And some of the crops we didn't even have new crop bids at that point. Things like green lentils and canary seed. And so at that point we were just guesstimating where they might come in. But anyway, so that's when it was dated. Marlena, do you have a prediction for new crop oat prices? I'll put you on the spot.
Yeah. No, I think that's your topic for today.
Oh, thank you.
I've got 16.25 flax bids, but
yeah,
all the feed grains have received another boost today, and which will have an effect on the acres and the prices it takes to actually secure the acres. That's on the smaller crops going to be one of the topics this year.
Yeah, I'd have to pull up I'd have to pull up a bit of a. I haven't checked the new crop oat bids for a little bit, so I don't have a prediction, and I'm always reluctant to make predictions because people think I'm in that business, but really I'm not. I'm in the business of pointing out things that people may or may not see, and some ideas about looking where things have been and where they could be. But in terms of predicting prices, that's usually, in my experience anyway, that's been more luck than brains. Glyphosate restrictions will be a limiting factor. It could be. I think there are people are already adjusting to that reality and have figured out some of those kind of things. So I don't know that it'll have that much of an effect on the bids. If it did start to cause that, we would see more of a response. Oh, Ernesto is asking, when is the Chilean new harvest? Oh boy, thanks, Ernesto. I believe that was the crop that just came off late in the 2020 calendar year, or in the fall, in October, November of the calendar year. Because it kind of coincided with the real dryness that happened in Argentina. So if my memory serves me correctly, I think that's when that was. And so there won't be another harvest until fall of 2021.
Mhm.
I feel the oat drink market is more of a short-term trend, or someone asked me that the other day, if the oat drink market is a short-term or a long-term trend. And I'm famously skeptical about all of these kind of things, but we have a jug of oat milk in our fridge alongside the regular milk, and it's not bad. That's not a real answer to your question, but I believe that whole milk alternatives thing has more staying power, and of the various types, the almond, soy, rice, oat, all of those, I believe oats has the best odds of increasing share within that portion of the market. So so I think it's a good long-term outlook. My question, and I still haven't got an answer on this, is it for a liter of oat milk, how many oats, how many pounds or whatever of oats go into that? Because I'd love to see how that actually moves the needle in terms of demand. Okay, Vicky is asking a question about flax. Do you see that one, Marlena?
Yeah, she's actually given some input on the low flax yields, and I too have seen the odd 30 bushel yield in some areas, but really what's required is that we bring overall yield, average yields up, into the 30 to 40 bushel area to get some traction in that crop. And I think if we do that, then we'll also see the acres spread out more reliably, actually. So yeah, I think there's just some work needed in that area. And she's pointing out that we are at least moving in the right direction, because for a long time, flax, like some of the other small crops, was completely neglected really on the research side.
Yeah, there's a couple of questions
Yeah,
here
I'm
about
giving up on the target prices for oats, actually. I think we'll get probably close. I always say that you have to look at the $3 to $3.50 is the traditional level, but this year you might have to move that up to the $4 level, and we have to get a better reading on the acreage this spring before you can really reliably answer that. And that's truly a tricky one. I've been doing a little bit of work on that, but we will see, I think, some increases, say 2% of wheat for sure, and some increases in canola. And once you start tinkering with the major commodities, you don't have much room to move with the small commodities, and it becomes very tricky to get some percentage points in there. And I believe that if we keep the movement up of the major commodities as we have this fall and winter, some of these smaller crops will have a hard time. So,
yeah, that acreage competition this year is going to be, it's making this, usually there's some clear winners and some clear losers, and this year there doesn't seem to be really any clear losers, although I'm hearing more negative talk about pulses, actually. So overseas buyers may need to get a little more active in those markets and start buying a little bit more there.
but we are seeing advances there in the new crop ideas. 28 cents for greens is not bad, really. We're not really
Yeah.
seeing that in terms of a willingness to contract that.
Yep.
And P values certainly are moving up when I thought before Christmas, the ideas just weren't good enough to really even keep the acreage up, never mind increasing them. And I think there's starting to be some response to that. So it's going to be very, very interesting spring.